Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for May 6, 2019. Hope everybody's having a great weekend. We do have a pretty busy week next week with a couple central banks meeting, but before I get into that, I need to mention that if you haven't signed up for ForexAnalytix, try it today. It's only $1 for 10 days. All you got to do is click the sign up button. Once you do that, download the mobile application so you can have all this analysis on your person as you actually remove yourself from the trading station and do human stuff with your families and friends. But for those of you that are, when you're trading and you are in front of your desktop computer, you have this great analysis platform for you as well. So we cover you on all the bases, so make sure you register. It's only $1 for 10 days. Okay, let's talk about next week. So next week we have some economic data. We have a couple central banks that are meeting. Probably the highlight of this next week is going to be the Bank of England, which, as far as the Bank of England goes, last month, people were, the Bank of England seemed pretty hawkish. We were looking for an interest rate hike, and here we are a month later, and everybody's expecting the Bank of England to keep rates unchanged. And the fact of the matter is the recent data weakness probably indicates that the growth trend is a little bit lower than the Bank of England believes. And so with that being said, you could see what has happened price-wise for the cable for the last couple weeks. And the fact of the matter is we set up a double top, and any type of rally now towards 137, you get above 136 and maybe close to 137, and that's going to set up for probably a great short. And that's probably a result of the dollar pulling back just a little bit. And I'm going to go into the dollar index in just a few minutes. But any rally that we see in the cable is probably going to be sold going into Thursday, which we have, not only the Bank of England, monetary decision. We also have the inflation report, and Mark Carney's probably going to walk back some of his hawkish rhetoric, and I expect the pound to probably get sold on any rally going into this week. And remember, we do have a double top, and the problem with this double top technically is that we actually posted a false breakout when we went above 143, and that's set up for the cable to move lower, and we're at a channel low, pretty key support, trendline support, but I think the cable's probably heading back to the low 130s, if not lower. And remember, the uncertainties surrounding Brexit, it's hard to believe that the Bank of England was getting as hawkish as they were, as we have ongoing Brexit negotiations as well, that things aren't necessarily running as smooth as the market originally thought. So but technically, the big double top is what's what we're paying attention to. Now, the other central bank that's meeting this week is going to be the Reserve Bank of New Zealand, the RBNZ, and we have a new central bank head. We are now going to be without Graham Wheeler, and now we have Adrian Orr. So the RBNZ will release its monetary policy statement, and it's going to be the first press conference with Adrian Orr, which personally I don't know a whole lot about. But the Kiwi, technically, we hit 161% extension of the last move up, and it's also a 618 retracement of the lows back here in November of last year to the trend highs. So it was what we called a confluence. We had a confluence of fib levels that around the 70-cent level that gave us a lot of support. But any rally, above 71 cents, maybe 71.50, is going to be used as probably a selling opportunity. Now, the one thing about the Kiwi is it was also divergent on relative strength. And so let's watch the Kiwi dollar. I think any rally above 71 cents, you've got to look for a possible short if we get a recovery. Now, I'm giving you a lot of ifs with the dollar because as we talked about the cable and the New Zealand, it's both against the dollar. And let's talk about the dollar index a little bit. Matter of fact, I'm going to actually go over to our charts here, and so I can draw on this just a bit. Now, we had talked about the last few weeks, several weeks. I've been looking for a dollar bounce, and it came the last 2 weeks, and it's been an amazing reversal. The dollar has squeezed higher. The euro dollar longs have, I don't want to say capitulated, but we've seen a lot of euro longs get absolutely destroyed. And you know, we've been talking about this poor positioning over the last several weeks, and that's come undone. Now, the thing about the dollar index is the dollar index has rallied to the 618 retracement of this last move lower. So when I say the last move, you're talking about November of 2017 to the trend lows. We're at the 618 retracement. We broke this downtrend line. You can see this blue line here. I'll move it for you, but I'm going to put it right back. We took out that downtrend line, and it's been a hell of a squeeze. It's been pretty amazing. Now, what we've noticed in the dollar is that we got extremely overbought. We're above the 200-day moving average, and I'm really not too sure what to do with the dollar here as far as will it continue higher? Will we pull back again? Will we get back below the 200-day moving average? I think it's quite possible from where we're at right now to at least get back towards the 200-day moving average and maybe at least bounce. Is the dollar finish going lower? There's so many moving parts in the market right now, and there's so much uncertainty surrounding the Fed, our administration, what's happening with tariffs, what's happening with trade negotiations with NAFTA, with Canada and Mexico, that I think it's really difficult at this point in time to make an assumption that the dollar is going to fall to new trend lows at this point or give us a more substantial bounce. And the one other factor that I like to take into account is bonds. And we've talked a lot about this, especially on Twitter or on the daily webinars. And if you don't listen to the Face daily webinars, you catch myself live with the rest of the ForexAnalytix team every single trading day. But we've been talking about this the last few trading days of this last week. Is if you look at the bond market has a very aggressive and heavily speculated short position in it. And it's the most, I think it's the highest speculative short position on record, if I'm not mistaken. Well, if everybody's short the bond market and the bond market decides to squeeze, whether it's a result of rates coming down, just yields coming down, or perhaps there's some risk aversion where the stock market pulls back a little bit, and you see a safe haven bid in bonds. If bonds rally, yields are going to come down, and if yields come down, typically that's going to be bearish the U.S. dollar. So that's why I'm not 100% convinced at this point in time that the dollar is going to continue to rally, because I think if the bond market comes unglued a little bit here and we do see a rally back in bonds and they squeeze back towards some of this previous support here, yields will come down and the dollar index as a result will fall. And so when you look at the dollar index here, after having such a great squeeze, I wouldn't be surprised if the dollar resets itself and the dollar index drops back below the 200-day moving average, maybe back towards 91. So I guess if you just take a step back a little bit, we're probably looking at a consolidation period of the dollar. And so be open. I think that's probably going to be one of the best suggestions I can give you guys and gals for the next couple of weeks, is be open to the idea that we're going to see some consolidation. We're going to be seeing some volatility, both bullish and bearish activity in the dollar across the board, which is great for us as traders. As traders, we're going to get some good opportunities going in both directions, I do believe. If you're looking to establish more of a position in the markets on being, rather bullish the dollar or bearish the dollar, I don't know if this is the right time. As was being bullish the dollar a couple weeks ago, that was the right call, and the dollar has recovered. But now that we've seen this recovery, we've gotten a little bit overbought, that now it's going to be more of a consolidation period. So, if you if you have some dollar longs and the euro dollar comes down and you make some money over the course of a couple of days, don't be gun shy about taking profits, reversing course if the theme changes a little bit in the markets. Also, one thing that I do want to mention as well is we're heading into the month of May, and May typically, there's an old saying, sell in May, go away in the stock market, and stocks. And I'm just going to take you to the S&P really quick. The S&P is still in this consolidation, and I look at it as more of a wedge pattern. So we're probably nearing some resistance in the equity markets, and I wouldn't be surprised if we see some continued consolidation here, in the S&P before maybe a break lower. If we get the old adage, sell in May, go away, and the stock market comes off a little bit, that could provoke some buying in the bond market, yields coming down, the dollar correcting a little bit more still. So, I think, again, it's important to keep an open mind with in regards to the dollar, in regards to stocks, and an increase in volatility is quite possible. One other thing that I want to mention this week is that we have Canadian employment on Friday, and remember, there's ongoing negotiations about NAFTA. I do agree, or do believe that there will be a new NAFTA agreement, and that's going to be bullish for the Canadian dollar. But if you notice the Canadian right now, we are in a 129 to 128 range. It's been very tight. It's been extremely volatile, and even though I think that with a new NAFTA agreement, that's going to be bullish to Canadian, meaning the dollar Canadian will drop in price a little bit. I think you have to be very careful about trading the Canadian until we see a new NAFTA agreement, whether or worst case scenario, the U.S. pulls out and then we have to completely renegotiate everything. Is that a risk? I mean, anything can happen. But the point I'm trying to make here is with Canadian employment on Friday, and then we also have, I think we have, let me double check this. We do have, just employment on Friday regarding Canada. If the NAFTA negotiations are still ongoing, try not to get too bullish or bearish to Canadian as a result of the employment data that comes out on Friday. So I've been telling all of our traders for the last couple of weeks, until I get further information on progress or not regarding NAFTA, I'm leaving the Canadian dollar alone. It's too volatile, and we're in a consolidation, and a breakout will probably give us a pretty good move, but it's not going to happen until we finish up these NAFTA negotiations, in my opinion. So, guys and gals, I hope you have a great trading week, and if you found this video beneficial for you, please hit the like button on YouTube. Click that little thumbs up. That gives us the motivation to continue to film these videos for you each and every week. And it's not just me. I have a lot of our team is working behind the scenes to make these videos happen, rendering them, posting them, doing the analysis for you on ForexAnalytix. We've got a great team behind us. Make sure you check us out on our website and see all the great guys and gals that we have on our team, and make sure you subscribe to our channel as well, so this way you don't miss any of these videos that we do for you every trading day of the week. Thank you very much. My name is Blake Morrow with ForexAnalytix. I hope you have a great trading week this week, and we'll see you on the FACE webinar on Monday.